Well, the extractive wealth, of course, is the Bank of England inflation. It's the QE that's created financialization. That's created an economy where, alchemy, financial alchemy, and buying properties to let has become the main thing. Monday, October 28th, 2024, Monaco 64, home of alternative economics and contrarian views. Well, I was warning colleagues at work back in the days when I worked in the city of London, even as far back as 2004 and 5, that the country was going to go bankrupt. And one of my colleagues was incensed, and I tried to explain to him why I thought that was going to happen. And the reason was that we kept spending and spending and spending the government on socialist policy, and that was Gordon Brown. And I said, central planning never works, it always fails. And by then, I also was aware of the manipulation of the precious metals and how that was used to keep interest rates lower, and that we had a housing bubble too. And lo and behold, in 2008, the whole system collapsed. The policymakers, politicians in the UK, they blamed the global financial crisis for it. That's the thing about the UK. Whenever there's a crisis here, they always blame outsiders, the rest of the world. When things work really well here, they take the credit. So we've gone from mistakes to mistakes to mistakes. And that's not just the Labour Party, it's also the Conservatives. They came in and they didn't do any better. They kept printing money out of thin air, the QE. Of course, it was started in 2008-09 under the Labour government. And I knew by 2009 that the country would be, the wealth, let's say inequality, would grow because the very wealthy would benefit from QE and low interest rates. And that's what's happened. So what am I trying to get at? Well, this week, of course, on Wednesday, the 30th, it's going to be a D-Day, in my opinion, for the current government. And I think it doesn't matter what government is in power. This is inevitable. And why? Well, because of maths. We're up to here in debt. We've killed the private sector, and the current government is going to make it even worse. So I think it's going to accelerate. And I'm not saying the Tories would have done any better, because they haven't, right? So I'm going to show you some indicators to keep an eye on that are really important to let you know whether the financial markets approve of Rachel Reeves' budget, which she'll present starting at 12:30 p.m. On Wednesday, 12:30 noon. It usually goes for an hour, and it will probably be the most important budget in the long time. I mean, we're now used to saying those kind of things, the most important election next week in the U.S. But before I go further, I just want to reference Alan Greenspan. And I know Alan Greenspan was the chairman of the Federal Reserve for about 18 years or so. But his philosophy was that gold was money, and gold was hated by politicians, by the statists, because it puts them in a straitjacket. So I'm going to quote here the conclusion to his Golden Economic Freedom essay or article he wrote in 1966, I think. And he said, "This is the shabby secret of the welfare statists' tirades against gold. Deficit spending is simply a scheme for the confiscation of wealth. Gold stands in the way of this insidious process. It stands as a protector of property rights. If one grasps this, one has no difficulty in understanding the statists' antagonism toward the gold standard and towards gold itself. And even in the mainstream media, I think I saw Talk TV on YouTube, and these two commentators, they were doctors, they actually present the show. They got like a message from one of the viewers saying that people are buying a lot of gold to hide their cash, to take their cash from the bank, because they're scared that the Labour government is going to come after the people who have been responsible and saved money that they earned and has been taxed already. They're going to come after the very wealthy. They're going to come after the not so wealthy. Yes, they could come after gold eventually, but that will be the last thing they'll come after. And that's why I've been warning people about it. And many people have asked me, where can I get gold? Well, shop around for precious metals dealers. They're out there here in the UK, but if you want to deal with someone with a firm that is reliable and has been in business for almost 45 years, go to my affiliate, Gold Investments. All the details are below in the description, and you can even talk to them. Oliver Temple and Simon Temple. I started dealing with their father, Mike Temple. He's retired and they've taken over. So just wanted to put that out there. And that's socialism for you. And what their way of thinking is that it's unfair, that a few have a lot of wealth and the many don't have that much wealth. And yeah, it's kind of unfair, but life is not fair a lot of times. And yesterday I went to play golf, and when I was driving back home, the radio, when I turned the car on, the LBC radio came on, and I just caught the end of a conversation that they had with an economist called, let's see here, where is it? Yeah, his name is Will Hutton, and I just heard his last comment. He said, oh yes, the global financial markets will not punish the UK. The government will keep borrowing funds through the bond market, and that's a good thing to keep their program going. And I thought to myself, who is this guy? So I looked him up, and of course he went to the London School of Economics. I think, he's a Keynesian. And I found an article he wrote, about a week ago in The Observer, which is a left-wing newspaper. It's like The Guardian, but it's the Sunday edition. And he says Britain's wealth gap is growing. Its malign effects seep into all aspects of life. It's a national disaster. And he's right. He says wealth distribution reeks of unfairness and poses a big threat to the country's well-being as climate change. Well, there you go. That's his way of thinking. But I went through the article. I'm going to put a link to it below in the description, and you can read the whole thing. It says, wealth distribution in Britain reeks of unfairness. One of the truths about wealth since time immemorial is that the more you have, the more you will accumulate. Wealth begets wealth. Well, it also means sometimes that you can lose it all. It doesn't work like that all the time. But anyway, thus, the decision to inject cumulatively 895 billion in cash, quantitative easing, well, that was money printing, Mr. Hutton, into the banking system between 2009 and 2021 to keep the credit system and the economy afloat after the financial crisis was certain to increase house prices unfairly. So what I'm trying to say here, he's found the cause of the increase in inequality. And what is that cause? Well, it's fiat currency inflation. It's money printing. It's bailing out the banks in '08. Yes. And as I said earlier, I was warning about this back in '08, '09. So what's his solution to this problem? Of wealth inequality. And he knows the cause. Well, it's not to go after the Bank of England and to go back to sound money and no inflation, because he doesn't talk about inflation here, because that's what it is, inflation. Back in 2002, when I first started accumulating gold, we were at 220 ounces, 220 pounds per ounce, and now we're at 2,100 pounds per ounce. Why is it happening? Well, because they've been inflating. Yes, a CPI is a phony measure. It's not even inflation. And they're going to continue to do it. So what's Will Hutton's solution to this problem of wealth inequality? Well, his solution is to make things even worse. It's to go after the people who have benefited from the QE. Yes, you might say it's unfair. They benefited because they're already wealthy, or maybe they were in the right place at the right time. They bought a house just before everything got inflated. And that's true. But I don't think the solution is to go and take their wealth, because that is socialism. That is Marxism. And what that's going to do, and we're reading everywhere here in the UK about what's going on, it's going to create a massive brain drain, and it's already doing so, of not just young people, but even middle-aged people. They're going to leave the country because, they want to protect their wealth that they've worked hard to accumulate over the years. They haven't been a burden to the state because they've saved. And I would add that the savings that they have are from income that has already been taxed. So this is a solution here. Well, first, reframe the argument. It is not wealth itself that is the problem. Well, I agree. And he agrees, and he says, rather it is disproportionate wealth and the way it has been won. Dial down talk about growth in the abstract. Dial up the need for Britain to build the next generation of great, consequential companies and their value to us all, and acknowledge the deserved personal fortunes that might be made in the process. That then creates the space to differentiate between value generating and extractive wealth. Well, the extractive wealth, of course, is the Bank of England inflation. It's the QE that's created financialization. That's created an economy where, alchemy, financial alchemy, and buying properties to let has become the main thing. So I agree with him on that. We have to have an economy that's based more on reality, that encourages real wealth building. But you can only do that with sound money. You can't do that by confiscating people's wealth and having the government extract that wealth and invest that wealth into the sectors that they think should be important. That's central planning. And we know that the Soviet Union did that under Lenin and Stalin and so on, and it completely failed. Central planning fails. He says, and the dangers of an economy and society over-reliant on high property prices. The former should be encouraged, the latter discouraged. Hence the case for tougher inheritance tax, introducing a proportional tax on all residential property instead of regressive council tax, and aggressively taxing the gains from land development. Beyond that, invest in everything that evinces opportunity for citizens who don't have assets behind them. education, profit sharing, employee share ownership, child trust funds, social housing, and do everything possible to make our shared public square less the preserve of the rich. So, yeah, that's central planning and never works. He wants to take the wealth that was created, yes, paper wealth, a lot of it, I would say, and direct it to creating wealth for the general public that hasn't benefited from it. It's going to be a disaster. I said earlier that the past governments, be them Labor, conservative, and the new Labor government we have now, they go from mistakes to mistakes. So the first mistake, of course, was Gordon Brown. He thought he'd eliminated boom and bust. He sold half the country's gold to try to keep the gold price down and interest rates low. He kind of succeeded in that, but by doing that, he created a massive real estate bubble that the banks abused, and eventually it collapsed in 07, 08. And then instead of punishing the bankers and letting everything collapse, just like Iceland did, no, we saved the bankers. We borrowed almost £1 trillion from 08 to 2021 in the form of QE to bail everyone out, well, to bail the banks out and the homeowners and the very wealthy. Bank of England printed all this to buy from the government, the gilts. And lo and behold, we're here, the greatest wealth inequality. And what do they want to do? Well, they want to make another mistake. They want to go the wrong way about it and confiscate this. And I agree. It's ephemeral wealth. They want to do that because they think they can fix it like that. But it's not going to work because the government is going to run out of money because you're going to punish the private sector. People are going to leave. The wealth creators, even the people that are not going to leave, they're not going to work as hard, and they're going to try as hard as possible to get paid outside the economy, if you know what I mean. And maybe that's why they want to abolish or get rid of cash so badly. So it's unfortunate. And what's the indicator that will tell you whether Rachel Reeves is going to be successful in convincing the markets? And I think that's highly unlikely. Well, it's the bond market, the gilt yields. And the same thing is happening in the U.S. Treasury yields are going up. As Paul Tudor Jones said the other day, and I agree with him, all roads lead to inflation. So keep an eye on the 10-year yield for the gilt yield. Right now we're at 431. It's the highest level in months. The key level above is going to be 440, and after that 475. So if by the end of the week we are at 5%, yeah, that means the markets don't like the budget, and there's going to be trouble ahead for the chancellor. I'm going to put a link to where you can follow gilt yields below in the description. But I will say, though, that they could get help, the government, in the gilt market. And from whom? Well, the Bank of England and the Treasury, they run an account called the Exchange Equalization Account, which was created when Britain left the gold standard in 1931 to manipulate the market. So you never know. But one thing's for sure, our currency is going to continue to go down the drain. And that's why you need a few coins of the realm in gold and silver, I would say. There's no capital gains tax on those yet. And I think it will be hard for them to put capital gains tax on legal tender because they are legal tender. And the other thing about UK debt, and I think we have over 2.5 trillion in debt, is that the maturity of UK debt is the longest maturity of all the developed nations. It's almost over 14 years. As you can see here, they've adjusted it for QE. Not sure what that means. It's another silly thing. But yeah, our debt is focused on the long term. And when there's inflation fears, the bond vigilantes will go after long-term debt more than the short-term debt. So sometimes that's helped the UK, the long-term maturity of our debt. When rates are really low, you could finance things really easily. But when the debt starts, when rates start going up, that's a real problem. And how is that going to be bad for the government and for the economy? Well, because if gilt yields continue to go higher, it's going to be harder and harder for the government to finance everything. And we know that they're going to tax the private sector and shift the wealth, and they call it investments in the public sector. But we know that it's the private sector that creates wealth. So it's going to be a disaster if this happens. And it doesn't mean to say you can't profit from it, from this situation. Yes, what they're doing is going to make things even worse, but there's always opportunity in crises, like the old Chinese proverb says. And I think it's more important than ever to have a few gold sovereigns or gold Britannias and some silver as well. You need to think about that. I'm not saying you put all your wealth in it, but they're going after the private pensions too. And I bet a lot of people who could take, let's say, 25% of their private pensions without tax. They've done it in the last few months, and a lot of them, I would say, probably bought some gold and stashed it away. And that, of course, is for people who are over 55. So there's so many things they can do in this budget that's going to hurt the wealthy, the average person that's saved. Yeah, so we got to wait, though, until the day after, on the 31st, to see the reaction of the markets and to see what they're really going to do. But it doesn't sound good. Anyway, here in the UK, the clocks have gone back, so we're only 4 hours ahead of Eastern Standard Time, or Eastern Time in the US. I think you guys in the US, your clocks go back in a week or two. I'm not sure. So it's 8:34 a.m. London time right now, which is 4:34 a.m. New York time. Yeah, the markets are pretty steady. We've seen gold and silver come off a little bit. I think it's to do with the geopolitical situation in the Middle East. Maybe there was a bit of a squeeze at the end on Friday because of what's happening there. And it hasn't escalated. So gold is at 27.35. It's down about 12. The low is 24, the high 48. Silver as well. It's down at around 21 cents at 33.50. Stock market, of course, keeps melting up. The Dow is up 200. The NASDAQ is up 156. S&P is down 33. That just goes to show that the markets see more and more inflation, because that's what it is. The Fed's probably going to cut rates next week, probably by 25, not 50. And yeah, the currencies are fairly quiet. And crude oil, of course, has come down a lot. It's off almost 5% at 68.26. That's WTI. That's because of the Middle East situation. Do I think that's important in relationship to gold and silver, the Middle East? In the short term, yeah, it will cause a few ups and downs, but long term, no. The long term driver for gold and silver is all the debt, all the inflation, all the deficit spending, and all the policy errors that we're going to continue to see. Yeah, they're digging an even deeper hole. So there you go. And before I finish, I'd like to excuse myself for my voice. I've got still a little bit of a trace of a cold. And yeah, and with that, I'm going to wish you all a very good day. Take care. Bye.